cheaply or not. With me now is Stephen Gibson. He is former Chief Economist and Director of Economic Policy at Postcom, which is an independent regulator for postal service. Hello to you. First of all, on that question, is it being sold off too cheaply?
OK, well, there are clearly a lot of risks in the long term of the postal business. There's the risk imminently of a potential strike. The CW are already balloting their members over that. But more importantly, the long-term future of the market is one where letters business has been declining very strongly over the last 5 years. It's lost about 30% of postal volumes. And while the parcels business has been growing on the back of e-commerce and people buying internet shopping, that's a very competitive market, and there are a lot of other players, and Royal Mail has the largest market share, but it is struggling to maintain that market share.
So that's not quite answering the question, is it? I mean, there are risks, obviously, but there are with any business. Is it being sold too cheaply?
Well, as I said, the government has clearly priced this sale off in order to sell the shares. So they will want to see it being sold in the public. It is, given the strength of demand, I would guess the investors are saying that it will go up in the short term, but I think it's the long-term health of the business that's really important, and whether we'll be able to sustain that momentum over the longer term.
There is a concern of partial asset stripping, of selling off prime, in particular prime London property. Is that a real fear?
OK, the Royal Mail prospectus has certainly set out that there are a number of properties like the Nine Elms sorting office and Mount Pleasant sorting offices, big London properties that have high asset values. But the Royal Mail still has to deliver its universal service. It still has to deliver to every address in the country 6 days a week, collection and delivery at a uniform price and at first-class sort of overnight quality of service targets. And in order to do that, it needs to maintain its asset base both rurally and also, very importantly, in central London, where a large part of mail is both collected and delivered. So it needs to maintain many of the assets, but it could well realise some of them by selling off some assets and getting some value.
You're in favour of the privatisation, aren't you? I mean, is it not another, in effect, will be another privatised, effectively a monopoly?
Well, firstly, the Royal Mail hasn't had a monopoly since 2006 legally. But
it's very partial competition, isn't it? And they still have to deliver that universal service and therefore have preference as a result of it.
Well, they have to deliver that. That's a cost to them rather than a benefit in many ways. In terms of a monopoly, yes, while it does deliver over 99% of all letters, if you think about what's happening to the wider communications market, there have been increased substitution to electronic mail, texts, SMS, etc. And Royal Mail has lost 25% of its market over the last 5 years and is forecast to lose another 5 to 6% per annum going forward. So it's a monopoly in a declining market, and one where if you put the price up, you really raise the risk of accelerating the decline.
OK, Stephen Gibson, thank you very much.
Thank you. Thank you.